Wonderful good day from Munich. Here it's Commodity TV and it's INCA One Resources time. With me here is Edward Kelly. He's the president and CEO of this very interesting, small but very interesting company. And we will talk about it to give us an update, what happened in the last 4 or 5 months, because we spoke the first time at PDAC 2013 in March in Toronto. And I found the model already there very interesting. And now I'm happy we have the guys here in Munich today. And yeah, to talk about what happened. What have you done? Ed, thanks for taking the time to come here to our studios. We spoke, as I said, in March at PDAC. So I was astonished about your business model, what you are doing, and what happened since March. What have you done?
Well, it's great to see you again, Johan. It's been a few months, and it's been very busy for the last 4 months now. Since the last time I think I spoke to you, we had plans and we had signed an LOI to be able to acquire this project, and just finishing up our due diligence process. We've completed all that now. We've been out on the mine site. We've been getting our infrastructures in place, whether it be from getting winches and buckets and carts and doing some drilling and getting all the electricity and all the components, the major components that we need to be able to get the mine started.
What's about permits? Do you have that also all?
Permits as
all
well.
Done now?
All the formalization permits have been completed, and even on the way to be able to complete up to 350-ton permit for the formalization process to be complete by, we're expecting this fall.
So we were talking about the plant and that you go straight like into production. One thing is toll milling, the other thing is that you can produce out of your own ore. So what happened there? Do you have the plant? Are you doing something now? Have you started production? What's going on?
Yeah, the last time I think we spoke, we talked about us needing, we bought the mine, but we didn't have a plant to be able to produce yet, and that was kind of a big question mark. And I'm happy to say just about 10 days ago, after looking all over Peru and scouring for a plant up and down the coast to be able to fit our model, we were able to find one, and we completed on the due diligence and took possession of it just about 7 days ago.
Wow.
So we're happy about that, and it gets us into cash flow and securing our own ore processing.
So that means that you have, starting from now, direct cash flow. Let's say from August on.
We just, exactly. From the time we have to do some maintenance on the plant now, but once we get it running, it's been operating for the past 5 years. We just want to take it over, put some investment into it, take it up to a point where we believe that it's stress tested, and then start processing our own ore.
So that means you are not in danger, because I saw on the balance sheet you have only $400,000 still in the bank. So as I always said, the walking death around with below the 200,000. You are not in debt stress, of course, because now you're really earning money and you have the money inflow.
Yes.
And what have you paid for that plant?
Well, that plant will cost us a total of, after all investments and upgrades, and the cost of acquiring the plant is approximately $600,000. So we're going to be going to the market now to be able to do a debt financing. Now that we're in cash flow, we can afford to be able to go to the market and
pay interest.
Pay interest. We've got cash flow. So we've announced that on the acquisition of this plant, and we'll be completing that in the next short while.
So there's interest there. Investors are giving you the money.
Yeah, investors are looking for different kinds of investments these days, investment vehicles, and because we've pivoted and gone from a traditional resource company to a more integrated mining company, where we've got your traditional resource project, as well as now we've got a mine and we've got a plant to be able to process and create cash flow. We can go, and we've got different options available to us to finance these kinds of projects instead of just straight equity. And that's what we're going to be doing now, is just through a debt offering, pays 10% interest, paid quarterly, and Canadian investors are looking for that more of a higher yield versus the risk of an equity investment now.
Good. With what daily tonnage you are now starting in the plant? What's the daily production? What can you get out for this year? What do you think you can make $1 million profit, or 2 million, or 3, or whatever? What is the plan there, and what are your production costs precisely? Can you elaborate a bit on that?
The plan is to, I mean, the plant was built. It's not a huge, beautiful plant. Obviously, we're just starting out, and it only cost $600,000. So. Can't have huge expectations, but it does produce cash, starting out at 25 tons per day. And we initially, with about another $100,000 investment, we believe we can double that capacity to 50 tons per day. And at 50 tons per day, we can produce enough, well, from our own ore as well as toll milling ore, be able to take the company into a positive cash flow position and stabilize the company. We don't have to rely on outside markets if we just wanted to stay at that. Obviously, we've got bigger plans, and there's a tremendous amount of opportunity there to be able to increase the tonnage and just the business that's available. So once we've optimized that, got it on solid footing, producing the cash, we will increase the capacity at about, we've committed to our management team and our board of directors of 50 tons per quarter.
So by Christmas you are at 100 then, or minimum?
We plan. Our business
maybe.
plan is about 100.
Okay.
About 100. So it's probably safe to be able to say that we'd like to be at that number, if not just from our own plant, but coming out of our mine as well as a tonnage.
And what do you think you can earn this year, money-wise?
Yeah, good question. Our business plan shows that after 12 months, starting July 1st, we will be able to produce somewhere in around, our goal is to produce somewhere around 7,000 ounces of gold. And, you know, depending on gold prices and whatnot, we should see, you know, our business model shows a profit of around $2 million, conservatively.
So that's a PE of 2 almost? Of your market cap today?
Yeah, pretty much.
Yeah, okay, that's quite cheap. Wow. Yeah, so let's come to a little bit of a breakdown of your costs. What will be the cost per ounce, and what's the situation there?
Our model, again, this is all modeled right now, and what we've been working with and based on. We're based on 10 grams per ton gold. I mean, our grades from our mine on the veins that have been sampled are running anywhere between average of 14 to 17 grams per ton gold. So we've, after dilution and metallurgy, we're using a model of about 10 grams per ton gold.
Pretty conservative then.
Yeah, we think that, as well as toll milling. You know, toll milling is running anywhere between 30 grams per ton to 90 grams per ton. So we believe that with the two, we should be able to have a solid basis of 10 grams per ton. So based on that, and say, you know, gold prices of, we've modeled now down to currently around $1,200 per ounce. Our cost per ton is running for mining budgeted for $45 per ton. Okay, now this is working in Peru, and it's not mechanical, you know, huge machines or anything like that. Small scale mining, and our transportation costs are quite high right now, around $40 per ton. And our milling costs around $85 per ton. So you put that all together, it's about $170 per ton based on 10 grams per ton. So if you take that to a cost basis per ounce, you're looking at around $510 cost per ounce. All in, you add the taxes, you got to pay the government and some partner fees, and our G&A overhead in Canada takes us to a profit of just over $300 per ounce. So all of our costs are just in around under $900 per ounce.
And of course, this is only with the low tonnage now calculated. If you put more tonnage on,
we'll get some scalability there.
Efficiency of scale, right?
Exactly. Exactly. Yeah. Yeah.
Oh, very interesting. This is interesting. Model.
We're excited
absolutely.
about it.
I believe that. Wow.
Okay. So we've stress tested it down to you know, after efficiencies and taxes. If gold got down to $850, $900, then you know we'd have to kind of look at some higher grade ore, as well as maybe some more toll milling. But even at that basis of just toll milling, we can be able to continue in our operations.
Okay, so it sounds like you have a busy summer then, and until Christmas with all that stuff.
Lots going on.
Let's talk shortly about Las Huaquilas. I hope I pronounced it right. That's your second project, but to me it looks more a little bit for the future. But there happened something good also, right?
For sure.
You got some permits or whatever.
No, that was our original project as a traditional mining or exploration company that we started out with a couple of years ago, and it's you know, one of your traditional exploration projects with lots of upside potential for maybe a 5 million ounce gold deposit. We've been working on getting all of our environmental and community studies and all put together. We submitted that to the government in January after about 2 years of working on that. And just about a month ago, we got our DIA from the government, which allows us to be able to...
What is DIA? What is that called?
It's like an environmental impact statement,
Okay.
which says that the government has looked at and reviewed at all of our plans and what we'd like to be able to do as far as a 20-platform drilling exploration program. And that now has been approved by the government. So
you have conformity to all standards, rules, and regulations.
Yes, exactly. Yeah. So, you know, in this marketplace, it would probably start off about, which doesn't, in this marketplace today as it stands, there isn't really the appetite to go out and spend maybe $20, $30 million on an exploration program for a large project and drill it out and then get some kind of feasibility study done and then you know, build a mine. There is going to be a mine there someday. Just right now, there isn't the appetite for that exploration cost to go into it, and that's one of the reasons why we saw that about a year ago, the marketplace changing. We decided to pivot and go into producing cash flow and not be part of the walking dead that
exactly.
I'm sure you've heard about in Vancouver.
Yes, yes, great. Yeah, one last question. What is your share in the company? Do you have shares?
I absolutely have shares. I've got approximately just around 3 million shares that I've bought and paid for myself.
So that's almost, what, 7%, something like this?
Yes. Yeah, 7%
So
of
you
the company.
have the same interest as all your shareholders?
I'm definitely aligned with shareholders.
Very good, very good. When will you start to pay dividends?
Well, that's a good question. You know, it's going to one day I'd love to be paying a dividend, especially when you own 3 million shares. But kind of what we've talked about is that you know, we want to build this up to around 1,000 tons per day after we've put together around 4 or 5 of these plants up and down the coast of Peru. And at that point, we'd be in a firm position to be able to start paying a dividend.
Lovely.
Yeah.
Thank you very much, Ed. All the best for that. We will watch you carefully.
Okay.
Yeah, ladies and gentlemen, that was Edward Kelly from INCA One Resources, the president and CEO. You heard it. That's a new business model for Peru by now, maybe for other countries too. And it's quite interesting because the company started to build plant and mills because milling capacity is not available really in Peru. And if you take the land map, it's quite interesting. They will build up in the future, I would call it those ore processing centers.
Yes.
And I think it could be very unique business model. And we are curious how this goes on in the future. We will keep you informed. Stay healthy. Thanks and bye-bye from Munich.